Next up, I'd like to introduce Charles Delingpole, the CEO of ComplyAdvantage. Before that, he co-founded the Student Room, Market Finance, before he turned his focus to compliance. Hey, Charlie, how are you?
Great to be here, Oliver. How are you?
Very good, thank you. Good to have you. First of all, we've been asking all of our speakers this afternoon what their advice is to other entrepreneurs, other CEOs, given the current climate. What would your advice be to other CEOs right now?
I guess on the one hand, there's the kind of Jack Dorsey guidance, which is this is the future, just get used to it. So as we heard like yesterday, Jack Dorsey, probably because he wants to work in Nigeria or go to Africa for half a year or something like that, said that the Twitter employees can now work at home for the next for the foreseeable future. So I think there are some people who hate lurching into the office every day, who hate going on busy tubes. And so I think for a big tranche of people, potentially they'll be very, very happy with this. So it could be that what we have now is just simply accelerating 10 years of future in space of a few months. So I guess that's a more kind of flippant response. I guess for a kind of more serious response, I guess there are some things which you might be able to do, like sell stuff or meet face to face, but there are some numbers that you can move. You can say have a goal of shipping 100 features or really working on employee training or the kind of non-financial KPIs, you can still move. So I think whatever your business is, you can still work hard, make progress, coordinate. I think at least for us, we can move reasonably effortlessly from having 4 offices to working entirely remotely. So we have 80 clients around. We have clients in 80 countries around the world. We have teams in Singapore, in Romania, and New York. And for us, we haven't really noticed any kind of material shift in the business. So I think ideally just going to carry on and get used to the future. Good.
Well, I'm glad to hear you guys are doing well. Can you tell us a bit about what you've seen since the rise of coronavirus in terms of the kind of financial crime that you're looking at? What impact has this had?
So I guess the interesting thing about financial crime is that it kind of permeates every different facet of the economy. So someone pinged me an article today saying that shipping rates for Maersk were down 30%. I think for what you've seen in drug deals is drug dealers have moved to shipping cocaine and heroin in bulk, right? Because they can't get the dealers out on the street. Therefore, at least for shipping, the same trend prevails, as in because you can't hide like humans being trafficked on ships, or you can't hide drugs on ships. Therefore, you have to move to other means. So I guess with global financial activity collapsing or shifting, the kind of baseline anomalies that you're looking for, as in you kind of had a kind of previous understanding of what the economy looked like and what customer behavior looked like. So suddenly you see spikes of transactional behavior and spikes of cash withdrawals, which you would never have seen beforehand. So I guess in money laundering, it's every sector of the economy, it's every industry, every geography. And suddenly you have to get used to an entirely new set of behaviors. So in that regard, companies have to be completely aware of what's happening and quickly adjust to the new reality.
And spending, we heard from Revolut, Richard Davies earlier, and I'm sure we'll hear more tomorrow from Anne Boden, but people's spending is changing, what they're buying. Transaction monitoring is sort of, has been turned upside down by what's going on. What does this mean for compliance and the work that you guys are doing?
So I think, at least in New York, they said that the last people you can furlough are the compliance officers. So I think, at least for us, other roles might be kind of optional, or they might be at the discretion of the company. So I think various fintechs you mentioned have all announced layoffs or furloughs. I think companies are in serious trouble if they fire any compliance officers. So for many of them, it's business as usual. I guess the interesting thing is people like Jez Staley, the Barclays CEO, and other big bank CEOs suddenly finding that the whole company can work effortlessly from their kitchen table. So I think the kind of interesting trend will be, to what extent in the future you'll have these massive towers in Canary Wharf full of compliance officers when they could be working at home.
Mm. And what's your view on that? You mentioned Jack Dorsey earlier, and he's obviously he's told his staff they don't have to come back to the office ever. What's your take? Do you think ComplyAdvantage will head back to the office when this all ends?
So we have this reasonably large office in Covent Garden, and previously we had everyone in there every day. The rent bills are huge, right? I think ideally in the future, you wouldn't just go to work and sit there in front of your laptop all day rather than talking to everyone. So I think there could be this inversion whereby to actually get work done, it could be you work at home, and then with the actual office, you go there with the explicit objective being to interact and talk. I think a lot of companies, particularly in San Francisco, have moved to remote working. So at least whenever I visit clients in SF, they always have half their teams from Salt Lake City and Utah, and that's been driven by astronomical rents and very high real estate prices. So I think the shift definitely impacted SF, and therefore the kind of collaboration tools are all there. And I think in terms of use of proceeds and funding, I think we have a team of 100 in Romania. I think in terms of like Stripe having their 5th development office being remote, I think just in terms of competitive warfare, being able to get the most bang for your buck and being able to accept talent from all over the world, I think people have learned how to work remotely, and they've learned that actually it isn't such a bad thing. So at least for me, I'd be pretty cool with working remotely. I think some people will want the kind of life-affirming interaction that comes from physical proximity, but I think there's something wrong with those people still working in offices.
You mentioned sort of collaboration, and obviously the crisis has pushed a lot of technologies to the forefront, which previously were nice to have but are now essential. What do you think the breakout financial technologies of this crisis will be, and who's benefiting because of them?
So I guess the most obvious technologies that have benefited have been things like Hopin.2 or StreamYard or Zoom, or I guess linked to that, aside from the kind of collaboration technologies, I guess there are various technologies around embedded finance, as in you already have all these layers of SaaS that have penetrated every form of working tool possible. And therefore, the next layer is to kind of weave finance into them. So there are companies like Liberis that will go to companies like GoCardless or other kind of platforms and offer financing within that. So to the extent that software and SaaS has kind of eaten the world, as per the Ansel Horowitz maxim, I guess the next stage is to embed within those like software layers, at the point of customer acquisition, different forms of finance. Like with Deliveroo, you can now get insurance at the point of becoming a rider, or you can get funding on Stripe. So I think there are ways of capital penetrating every single form of SaaS interaction, and that's embedded finance, and that's the kind of macro trend which was being pumped heavily before COVID, which should only see an acceleration after COVID.
Just a note to our audience, if you have any questions for Charlie, please pop them into the chat on the right-hand side, and we will endeavour to get to them. Charles, I saw recently you've taken on the role of an angel investor. You've backed Credit Kudos, the brilliant startup, which we've been following a little bit as well. Congrats on that. What do you think the role of angel investors is during this crisis?
So there are two kind of ex-Market Invoice teams that have raised rounds, I think recently, and I think like that was exciting, I think, for me, because both those teams I knew because I worked with them at Market Invoice, and I knew they're a great team, super high quality, but they kind of haven't done it beforehand, and therefore I think some of them need kind of contact, introductions, encouragement, and I think that's the most value you can add. I think kind of Series A, late seed stage, there are kind of tons of people who have way more expertise than me. I think the kind of deep pre-seed, super high risk, kind of conceptual stage where you need to have a punt on someone who isn't necessarily well known, I think that's the kind of biggest value that you can add as an angel investor. I think like the kind of sums of capital are just astronomical, right? I think there's so many funds or pension funds or growth funds that can give you 50, 100 million. I think that the kind of tough one is just getting things off the ground, getting the first client, and that's often the hardest. And so I think that for me is where I've kind of done the most stuff, is just kind of even before they've got a PowerPoint, just saying actually that makes sense, or actually that's completely crazy.
Mm-hmm. And there's a worry at the moment that a lot of traditional angel investors will, do what we're all doing, which is they'll save their money. They'll hold back from making investments just at the time that a lot of these great ideas need it, which is great.
I think people are still, because they're so bored, people are still pretty active. As in, I think like I've seen tons of people send rounds like PDFs and PowerPoints. I think what's probably missing is that you aren't going to meet people, you aren't going to have conversations. I think just kind of social isolation doesn't necessarily breed collaboration. As in these kind of conversations, I think like Zoom birthday parties, they're fine, but they're not quite the same as like the real thing. So I think fundamentally you build companies because they're fun and exciting, and you like working with people, and that's much harder if you're kind of doing it over Zoom, right?
When it comes to not so much investments, but acquisitions and consolidation, a few people have said that the fallout from coronavirus might be a wave of consolidation across the sector. What do you think we're going to see when it comes to things like acquisitions and M&A over the coming months and years?
The kind of long-term structural trend was unbundling then bundling. So like 10 years ago, there was this diagram of HFC's website, and in the same way that you had the kind of Craigslist one, and you could see each of these different segments became like Airbnb, or they became like sub websites, right? I think similarly at HSBC, every single part of the universal bank has been unbundled into like Adyen or Revolut. And I think what you've seen is now that they've got acquired users, as in they have 1 million users, then they're constantly launching new products they can cross-sell. I think companies like Marqeta, for instance, offer you the ability to white label debit cards, right? So I think suddenly everyone started issuing debit cards, right? So I think given you have scaled KYC users, given you have well-developed wholesale infrastructure, it's much easier to launch financial institutions, and therefore it kind of again circles back to the whole embedded finance. Can you acquire users? Can you cross-sell them different products? I think in terms of acquisitions and divestments, we've had some companies come to us say, listen, we'd like to sell now. I think those companies that took their funding and like just spent it all very quickly on profligacy, I think there might be a mismatch between what the investors want and what people are prepared to buy. I think also there is something to be said for focus and doing one thing well. I think there's still lots of money out there. I think, but you have to show that you use the money wisely and you haven't wasted it. So potentially, but I think lots of nuances around that question.
I want to ask you what you think is going to happen next. So assuming that we now move from the crisis into a recovery phase, and the economy starts to pick back up in the months ahead, what happens with regards to compliance? Can you tell us a little bit about what you think is going to happen in the landscape?
I think some things don't necessarily change. As in, I think one of the key things that I bet on, at least, was that you had this like the kind of genesis of money laundering and terrorist financing, at least in regulatory terms, was 9/11, and so you had this vast institutional edifice grow up around fighting like Al Qaeda and terrorist financing, and the big problem was you have these huge teams, huge expense, but still massive fines and huge failings. And I think that still hasn't gone away. And even though we're kind of currently 250 people, we have kind of decent scale, I think we're still kind of very small in the overall scheme of things. We still haven't solved financial crime. We still haven't eliminated terrorism. We still haven't stopped human trafficking. So I think at least the way I see it, is we're still at the beginning of a very long journey. The underlying problems haven't been solved. I think what will change with COVID is people will learn that hopefully cloud technology works and you don't need to be on premise, and there'll be more trust in the future. So I think there'll be more acceleration, but I still think there's a 20-year journey to go through to actually finish these things and improve society for the better.
You might have heard that we're doing a poll at the moment, and the poll now is, what do you think of European governments and the support that they're giving to FinTech throughout the crisis? And I wondered, what's your take on the support, both from the UK government and what you've seen around Europe as well?
I think, at least for us, we've been a huge beneficiary of the R&D tax credit. So we probably invested £30 million last year on tech, right? And I think we'll be able to reclaim a big chunk of that. So that's been a huge beneficial thing for us. In terms of the C-bill loan, so I think companies like Market Invoice got given authorization to lend that. I think personally, I've never been a huge beneficiary of any kind of government money. I know companies like Kodak, for instance, had £5 million worth of government money from the RBS settlement. So I think, and I know companies like Asimo have the European Investment Bank loan, which is hugely beneficial. So I think if you can learn how to use these schemes, which I don't think I have necessarily particularly well, then yeah, I think potentially they can be. But I think at the same time, at least for me, we've raised nearly $40 million of bolts and off index. And I think having the support and network and institutional backing from those kind of investors has been hugely beneficial. So hopefully the money from the European Investment Bank or from the C-bill loan will also be beneficial as well.
We'll see. We've got Charlotte Crosswell from Innovate Finance coming on next, so we'll have to ask her what she makes of the government support as well. A question from our audience. What challenges, can you tell us a bit about the challenges you faced with expanding to the US? And what advice would you give to other fintechs looking to make the leap to the US? And I guess if you could give us some coronavirus context as well, you know, has that changed things or changed your opinion?
So I started this company on my own, and we launched when we had 20 people in New York. And I think we really struggled to really find the right people there. I think hiring is hard in the UK to find great people. I think competing in somewhere like New York or the US, it's just a massive market and people have never really heard of you. And therefore, but I think we recently hired a CFO, COO, who's been a huge help in terms of having someone extremely competent and strong and well-connected on the ground in New York. So I think the kind of cliche advice is send a co-founder. We never had that opportunity. I think when we launched in Singapore, we had people who went from the London office, and that was way easier, right? So I think people who understand the culture, who understand the nuances, I think, you know, it's hard enough for someone who joins a company to navigate the organization, understand how to get things done. So I think ideally, having lots of co-founders, ideally ones already based in the US. And yeah, I think jet lag is also a huge issue, right? In terms of constantly flying back and forth, you know, waking up in SF, and yeah. So I think it's I think at least for us, having clients in 80 countries, it's like a huge challenge, right? So I think yeah, I think this you just have to work twice as hard and ideally hire people who are twice as good.
What have you guys done with regards to your hiring over the last couple of months? We've seen, you know, some businesses have kept hiring, others have slowed down, others have stopped entirely. How are you guys doing that, and how are you doing it? Are you doing it all remotely as well?
Yeah, so I think we've had kind of like probably 20 new joiners in the past 3 months. So and that's kind of spread across UK, US, New York. So I think we kind of carry on hiring. I think if we're in a good place, then there are tons of great people available, right? So I think I think lots of people have joined the company, but I never met. I have no idea if they have legs or are simply kind of torsos that float in the air, right? So yeah, and it could be another kind of few months before things get back to normal. So there isn't really a scenario whereby you can simply have 9 months of a company off, right? Like you're always under huge pressure from clients, investors, employees to move faster, right? So I think it's really important to attempt to move fast. And I think even investors still are fairly comfortable investing, even if they haven't actually met you face to face, which is again probably even stranger, given that's not like that's more of a marriage than a kind of short term thing. So yeah, I think it's the new normal and we have to get used to it.
Yeah. A question in the chat from Lewis Harris. He's asked, what sort of partnerships are you looking to form to grow overseas and in the UK? Can you tell us a bit about your partnerships?
Yeah, so we have roughly 90 partners. That could be like core banking platforms. That could be identity verification providers. So what we built is a database of 10 million terrorists, high-risk entities, human traffickers. And so that data is useful all over the world, right? So with in the same way that embedded finance allows you to place funding next to the client, similarly for us, wherever you're onboarding a client, understanding your supplier or making a payment, we want to understand if that's going to ISIS or Taliban. So the partners are every type of partner all over the world. So yeah, the partnership's been a really important part of our strategy.
Another question has come through. Open finance is one of those words that we talk a lot about. Does open finance represent a long-term disruption to what's going on in fintech, do you think?
What is open finance? I understand
the development of open banking, essentially, but adding more products, pensions, savings.
Yeah. So in terms of the ramifications of open banking, I think it's definitely allowed new entrants to enter the market, which wouldn't have been possible. So I think in terms of the kind of the foundational strategy was that all the data was locked up within the 4 main clearing banks, and therefore to have that information available to new lenders like Koyo, for instance, or Autocredit Kudos, right? So I invested in 2 companies that are taking advantage of that and being able to make payments, make loans. So I think it's led to this kind of Cambrian explosion of new entrants. It's undermined the barriers to entry to the kind of big 4 banking providers, and it's resulted in huge amounts of consumer choice and better products for consumers. So I think it's been a great boon to organized fintech companies.
Someone's asked, ComplyAdvantage is your 3rd startup. So what have you learned? What did you learn from the previous 2? And how did you apply that to ComplyAdvantage? And I guess if there's any lessons from the 3rd startup, what would you be able to share those as well?
Yeah, I think what I'm doing right now is kind of uncharted territory for me in terms of the size and scale and complexity and scope. And I think I'm always learning, right, in terms of how I can communicate more effectively. I think also for us, we have this kind of big end vision, and being able to translate that into kind of tactical incremental detail is still like a challenge for me. So I started my first company when I was 16, and I think I knew that I didn't know anything. I knew I was super ignorant. I think that was before Facebook. One of my investors there said, Charlie, you could have won the Olympics. Instead, you won the school egg and spoon race, right? You know, the business was fine, but it could be a lot bigger. I think similarly with Market Invoice, that was kind of 2009, right? The midst of actual crisis, fintech didn't exist, right? As far as we were concerned, it was invoice finance. So I think similarly, there are tons of things that I would have done differently and done better. I think it's been a privilege to work with people like Bolt and Index, to work with lots of great people who have lots of experience. And I think still, fundamentally, you're always going into work every day thinking, how can we move the business forward. And I think still there are kind of conceptual frameworks or understandings that I kind of don't have that I'd love to be able to understand. And yeah, so I think you're always learning. I think getting your business now from like 250 people to 1,000 people and to like 100 million revenue is kind of an entirely different qualitative challenge to getting it off the ground. I think the first like, 10 million of revenue, I've done like, like I can do that fairly easily, I think, right? I think the big challenge is kind of getting it to that next stage and ideally towards something like an IPO.
Last question from me, and it's one we're asking all the speakers. What do you think the lasting impact of the current Corona crisis will be in FinTech? When we look back 5 years in the future, what will we remember? What changes will have happened based on what we're seeing now?
Good question. I think probably just acceleration, as in we probably thought it would take 5 years to happen, but it said it happened overnight in 3 months' time, right? So I think the fundamental shift was from big universal banks with branches to everything being entirely via app and entirely kind of non-face-to-face. So I think if it's going to be one big accelerant for that, it's going to be the Corona crisis.
Excellent. Charles, thank you very much. Great to chat with you.